You must have heard people saying this: buy the dips and short the reps, or buy low and sell high. But how to do this exactly? The answer is pullbacks. Hello and welcome to Forex Monopoly. My name is Daksh, and in this video I will tell my secret technique of trading pullbacks, and not only that, but I'm also going to share my secret technique to identify between a pullback and a reversal so that you don't fall for the pullback trap. So make sure you watch this video till the end. Now, before revealing the secret of trading pullbacks, I want you to first understand what a pullback is and how is it formed. And this is going to be the most important part, because you cannot trade pullbacks in a better way if you don't understand it first. So let's first understand what are pullbacks, how is it formed, and then I will tell you about my secret technique that will change the way you trade pullbacks. So what are pullbacks? When the price is in a trend, it will never move up or down in a straight line all the time. There will be instances where it moves away from the trend. If you open any price chart of any currency pair and observe the trends, you will see that price most often moves along the trend and has a minor move against the trend from the time to time. And this minor price movement against the trend is what we know as pullbacks. To make things more clear to you, imagine from this level the price moved up and then the price started a correction. So if the price is trending in any one direction, then this level to which the price moved is called as pullback, and finding out exactly when the pullback will end and capitalizing on it is called pullback trading. Now that you know what a pullback is, let us understand how are they formed, because it is really going to be helpful while you trade pullbacks. By the way, if you are enjoying this video, make sure you hit that like button. So why do these pullbacks occur? When a price is moving in an uptrend, it means that the buyers are outweighing the sellers and they are heavily buying and taking the price higher. Now, if the price is in a downtrend, then sellers are in control and are actively selling and moving the price down. This activity of buying or selling cannot keep on going all the time. There are times when buyers and sellers get exhausted and it seems like they are taking some rest. In the meanwhile, the opposite market participants look to gain control of the market and try to drive the price in the opposite direction of the current trend. And this is when the prevailing trend participants resume their activity, and now the price is available at a lower or a discount price to them. And this further intensifies their activity and price resumes in its prevailing trend. Now that you know what a pullback is and how is it formed, I will tell you my secret technique to trade pullbacks. But before we move to that, here is a really important thing I need to talk to you about. I have always been asked a lot of questions about trading pullbacks and riding a trend. And there are some most common questions which I always get, and you may have it too. Like, how to know when the pullbacks will end, or where to put the stop loss, and also, do you need to really wait for the confirmation to enter into a trade? I totally understand how you feel and what your questions are. And I know many traders have a lot of trouble trading pullbacks and they get frustrated from losing and finally give up on it. They don't succeed because they do not know this small secret that I'm about to reveal. And this secret is simple yet very powerful and will solve the majority of the problems related to pullback trading. So make sure you pay attention to this. So the secret is classifying pullbacks into different types. To solve all the problems associated with pullback trading, I developed a technique. And in that technique, what I did is divided pullbacks in 3 different types and used 3 different ways to trade each one. So the 3 different types of pullbacks are type 1, type 2 and type 3 pullbacks. Type 1 being the small pullback, type 2 is the medium pullback and type 3 is the deeper pullback. Now let us first try to understand each one of them and then I will tell you the ways to trade each one separately. So basically there are 3 different types of pullbacks: the type 1 pullback, the type 2 pullback and the type 3 pullback. Now let us start by understanding the type 1 pullback or the short pullbacks. The short pullback represents that the party dominating is highly active. And the most important thing or the most easy way to understand the type of pullback you are seeing is using the Fibonacci retracement. Like if there is a type 1 pullback, you will always see that the pullback is less than the second level of Fibonacci, that is less than 0.382. That is, after an impulse, the price will retrace less than 0.382. Like if we draw Fibonacci retracement from this point and then we take it till this point, you will see that we have a pullback over here, but the pullback is very small, and this is the type 1 pullback because the price have not retraced till 0.382. So anything above 0.382 will be type 1 pullback. Now we will see how to trade the type 1 pullback after we are done understanding the next 2 types of pullback. So the next type of pullback is the type 2 pullback. Now this is also called as the medium pullback, and it tells us that the party dominating is now facing a counter trend pressure. And the most easiest way to find out if this is a type 2 pullback is by using Fibonacci retracement. And if after drawing the Fibonacci retracement, the price has retraced or pulled back till 0.382 or let us say till 0.618 level, then that will be our type 2 pullback. For example, let us draw a Fibonacci retracement from this point to this high over here. This will be our new high, so we are joining from the start to the new high because this high is higher than the previous one. So now we have a new higher high. So for that we always draw Fibonacci from the lowest point to the new higher high, which will be over here. So in this case you can see after this move the price then retraced till 0.382 level. So anything on 0.382 or till 0.618 will be type 2 pullback. Now again I will tell you how to trade these pullback, but first let us go and understand the third type of pullback, which is going to be very, very important because these are where a lot of people lose their money. That is the type 3 pullback, the deep pullbacks. So in type 3 pullbacks, what happens is the party dominating earlier takes rest. And so we see a huge counter trend movement in the opposite direction. So in this, what will happen, the easiest way to understand the type 3 pullbacks is by again drawing Fibonacci retracement, and this time the price will retrace more than 0.618 and most of the time till the level from where you drew the Fibonacci ratio. For example, let us say the price moved from this point and it moved till this level. Now most of the times what happens is, let us say this is one single move, and now to spot the pullback, let us say if the price retraces till 0.382 or 0.618, we have type 2. But then when it retraces below it, then we have type 3 pullback. And most of the time we see a retracement till this level from where the initial move began, which will in this case will be support, and in a downtrend that will be the resistance. So along with the Fibonacci retracement, you can also use the higher high and higher low technique to understand this. And if you haven't watched that video of higher highs and higher lows, you can check it out by clicking the I button. So just to give you a brief, what is the higher high and higher low technique is, let us say when the price moves up, it creates a higher high, then a higher low, and then a higher high, higher low, then a higher high. And this is how the price moves in a trending market. So this will be the pullback, then again a pullback. Now this time the price should give a pullback which is higher than this one. But when there is a deeper pullback, we see that this pullback or the retracement goes to the initial level from which the first move began, which will be this level. So many times when we try to draw a Fibonacci from this level to the new high, and when the price moves down, it will most probably retrace till the start of the first move, which was this in this case. So these are the three different types of pullbacks, and I hope you understood everything. Now I will tell you how to trade each one so that you get better at it. Now that you know about the three different types of pullbacks, let us quickly go to the chart where I will tell you how to trade each one with a different technique. Now let us learn how to trade each type of pullback. And let us start with the type 1 pullback. Now as the type 1 pullback represents that the party dominating is highly active, and as we get a very short pullback, there is only one efficient way to trade it, and that is using a breakout technique. Now if you don't know what a breakout technique or what a breakout is, I have added a video on it and you can check it out by clicking the I button. So to trade these type of pullback, what you have to do is, after a pullback you have to wait for the price to break out of the previous high or a previous low, and when the price breaks out of it, only then you have to enter a trade, because that confirms that the pullback is over and now the price can move up. And as the party dominating is highly active, it gives us a good win rate, and we most often end up at the winning side. So to trade these type of pullbacks, you can enter after the breakout or after a new high is created in bullish market, and then we can keep the stop loss a few pips below this level, because what happens is many times the price will just move over here, then it will again move down, and then it will give a larger short or larger type 1 pullback. And so to getting stopped out, what we can do is keep a realistic stop loss below this, below the initial pullback level. For example, let us say if we see this example here, this was the type 1 pullback. So to trade this, what we can do is we have to draw or mark the high, and then when the price moves above it and breaks out of it, then we have to enter a trade over here, and then we have to keep the stop loss below this pullback so that we are on a safer side. So you can see after this pullback, and when the price break out of this, the price then retested the level and then it started moving up. Now let us again take a new example. So if you see and take this as an example, you can see that this is a type 1 pullback. So in a type 1 pullback, what you have to do is you have to enter after the breakout of the high. So over here, just draw a level, and then when the price moves above it, like it happened over here, we will enter a trade over here and then keep the stop loss few pips below this. And you can see how after this the price started to move up. So this is how we trade the level 1 pullback. Now let us see how to trade that level 2 pullback. Now as we get to see a medium pullback in level 2 pullback, what we have to do is we can use Fibonacci levels plus moving averages and any type of candlestick patterns to trade level 2 pullback. For example, let us say this was a level 2 pullback. So we will first draw the Fibonacci retracement from this line to this line. And after we get a confirmation that this is a level 2 pullback, what we have to do is we have to use Fibonacci ratios to enter a trade. But using or taking entries only based on Fibonacci retracement is not a good idea. So always mix that up with a moving average, or let's say a candlestick patterns. So in this case, you can see that we had a bullish engulfing pattern at 0.382 level, and so we could have entered a trade over here. But then again, based on how well you are able to predict the moves or how well you are at technical analysis, you would have to set your stop loss. So your safe stop loss would be below this level, which is 0.618, and your risk stop loss will be below the candle that is below the bullish engulfing candle. Now again, let us take a few more examples for it. So if we see, we again have an level 2 pullback over here. So if you can see, after this move the price corrected and then it gave a pullback till 0.618 level, and there we got to see a bullish doji. So we already had two confirmation, that is the Fibonacci level 0.618 rejection and also a bullish doji, and plus we have a 50 period moving average and the price is rejecting it. So we could have entered after the formation of this doji, and then we have to keep our stop loss a few pips below this level, and you can see after that the price started to move up. So this is how you trade a level 2 pullback. Now the most important thing is to understand how to trade a level 3 pullback. So let us now understand how to trade the level 3 pullbacks. So as I told you, in a level 3 pullback, what happens is the price usually retraces to the initial level from where the move started, or more than 0.618. So if you can see over here in this example, the price almost retraced to the same level from which this initial big move started. Because let us say the price was uptrending and creating high highs and high lows. So this was the high low, then the price created a higher high, then a higher low, then again a higher high, and then a high low. So from here the new move began and it gave a new higher high. So after this high, the price then gave a big retracement, and then it retraced almost 100% of this big move. So let us say if we draw a Fibonacci from this point till the new high, you can see the price almost retraced to this level from where the price began. So in such case, that is the level 3 pullback, what we have to do is, the most important thing to look for is support and resistance. In this case, this was our support level, and then the next thing to look for is a moving average. Like if there is a moving average which the price is respecting, and the other things is using the candlestick patterns. So we have to see if there is a candlestick pattern over here, and then we have to enter a trade. Now if you don't have a candlestick pattern, or let us say a moving average, what you have to do is take the Fibonacci retracement and go to the previous high low, which in this case was over here, and then draw a Fibonacci retracement from this low to a new high, which will be over here. And we only did this because this time after this move, the price retraced 100%. And so to draw a new Fibonacci, what we have to do is we have to start from the beginning of the big move, which would be over here, and to the high, which will be over here. And then we got a retracement till 0.618 level. And then we also have a support. So we could have an entry over here, and we can keep the stop loss few pips below this level depending upon the time frame which you are using, and also the volatility of the chart. So this is how you trade three different types of pullbacks, and this is the best technique to win trades using pullback technique. Now here we are at the most important part of this video, my secret technique of identifying between pullback and reversal so that you don't fall for the pullback traps. So let's quickly go to the chart to understand this. So the most important thing for understanding this technique is to understand how trends work and how highs and lows are formed. So there is a very simple thing in trending markets. When the market is uptrending, the price creates higher highs and high lows, and it moves something like this, in which the higher lows will be the pullback or the levels to which the pullback ends. And in a downtrending market, the price will move like this and create lower low, lower high, lower low, lower high, lower low, lower high, and lower low. And it will move like this, in which the lower high will be the pullback to which the price retraces and the new wave or new impulse begin. So to distinguish between a pullback and a reversal, you have to understand how the highs and lows work properly. So whenever the price is reversing, you will see that when the price was creating higher high and higher low, let us take the example of a bullish trend. So in this uptrend, the price was moving up and the price was creating high high, high low, high high, high low, higher high, and high low. So whenever the price is doing this, and instead of creating high highs and higher lows, and if goes on to create a lower low, then this tells us that this is not just a pullback, but a reversal can be now expected, and the price can now start moving in the downward direction. And the same goes on with the downtrending market. Like here, the price was creating lower low, lower high, lower low, lower high, lower low, lower high, and lower low. But now, instead of creating a lower high and a lower low, the price moved up and moved above the previous lower high and created a new higher high, indicating that the trend has changed. And so this will no longer serve you as a pullback entry, and you will have to change your bias to find bullish entries and go long from here. Like, let us say, if we take this example, okay, consider the price was moving up or was in a uptrending market. The price was in an uptrending market. So you can see the price was moving up, then a low, then moving up, a low, that is a high and a low, then again a high, and this time the price dropped down. But when the price dropped down, it did not move below this level. So when the price doesn't move below the previous higher low, which in this case was this, we still know that the bullish trend or the uptrend is still there, and the price can move up because the buyer are holding their positions. So again from here the price moved up, and then it gave a new high, moved down, then again a move up. So again this time the price dropped till this level, but the price did not move below the previous higher low, which will be over here, and that confirms that it is not a reversal but a pullback, a level 3 pullback. And if it would have moved below this, then we would have got a confirmation that the price is now changed the trend, that is the buyers are out and sellers are in, and the price can now move down. And the same thing would have happened over here if the price would have moved below this and created a lower low, then we would have said that this is not a pullback but a reversal. So this is how you spot between a reversal and a pullback.